Adapt IT released its annual results today, showing the impact of COVID-19 lockdown restrictions and regulations on the software services group. Revenue was up by just 1% over the period, while headline earnings per share fell 16%. And while cash generated from operations grew 39%, the company says it's sticking to cash preservation and as such has opted not to declare a dividend. Company CEO Tiffany Dunstan joins us now. Thanks so much, Tiffany, for your time this evening. So before we get to the results and why we've had Adapt IT so sought after, we have Huge Group now out of the running. So safe to say that the Valaris Group's takeover is most likely a done deal, with Adapt IT's delisting from the JSE part of the new reality.
Yes, I think the results of the shareholders' decisions on these two corporate actions are quite plain to see. The Huge Group closed with 1.9% of our shareholders taking it up, and Huge Group has since disposed of those shares. So that remains with the Valaris transaction still live. That transaction was approved by 87% of shareholders voting in favour on the 30th of June meeting. And we're currently in the process of fulfilling the regulatory conditions. There are 5 countries in which we need Competition Commission approval, and we're fulfilling the last few conditions precedent to that transaction. So it should proceed and should do so by the beginning of December.
Okay,
if all goes accordingly.
So let's take a closer look then, Tiffany, at what's likely to be your final set of results then as a listed company on the JSE. You've eked out a 1% improvement on your revenue line in what was a very tumultuous period for Adapt IT. You've had aggressive advances from suitors coming your way. You've had leadership challenges at the helm as well. So how much of the performance you've put on the table, as a result of tough business and economic conditions in the country, how much sheer distraction that's taken some attention away from business growth?
Alicia, I think I can safely say that our operational executive management was always focused on the business throughout. We've been handling the corporate action and the boardroom matters very much at the group executive level. And so I think that the bulk of that impact is purely just the trading environment that we're under. In the last full 12 months have been affected by COVID. A couple of our verticals more severely than others, in particular, for example, the hospitality sector, which faced repeated lockdowns, and legislative closures. So mostly we believe it was just the economic trading environment in the period.
Yeah, so while you do highlight that most of your divisions did not experience major business disruptions during lockdown, some were affected more so than others, and that really offsetting any cushion you were afforded over the period. How much of a back to normal scenario are you starting to see evolve?
We are starting to see green shoots, Alicia. We did obviously have the civil unrest in July, which was just post year end. And there has been a little bit more tentative, behavior from customers post that to see whether that would pass. But we are now seeing customers wanting to resume their more normal kind of profile of how they would continue with, IT investment projects. So I think now that we believe that we won't be in rolling lockdowns indefinitely, that we'll need to cope with this virus and start to be able to live a COVID normal life, that customers are resuming their normal pattern of buying.
Yeah.
Obviously, if you haven't invested in your IT for 18 months or you've put projects on hold, you have a backlog of projects. And certainly executives have become acutely aware of the importance of their digital platforms for doing business, as we do it today.
And as those taps then being turned on, Tiffany, you're very much ready to take on the demand that's expected to come through.
We are. We're very excited about it, Alicia. I think we've had the quieter period where we haven't been making acquisitions. We've been dealing with the corporate actions. But you'll see from our results, our net gearing is now down to 17%. We've been highly cash generative in the period, which means we're ready to resume our acquisitive strategy. And we're very much excited about that. put this very intense period behind us and focus again on our customers, our products, and our markets.
Like you say, it's quite impressive that net gearing position being reduced from 45% to 17% right now. This as you've had a strong focus on, operational efficiencies and extracting where you can. Tiffany, how much more is there to potentially be extracted here, and how much more scope for margin improvement as a result?
Look, I think we're running the business quite efficiently now. There's always scope to improve. We never say we've done everything. However, I think where we are looking now is on the innovation front, to keep adding value to our customers through innovation and bringing them, more value in their operations. So, from a margin perspective, we would be looking at, new solutions to customers and expanding our market into our African target markets as well as APAC. And that's where we would see the margin coming from, Alicia.
Yeah.
Going forward from here.
If we take a look at that investment, how does that skew your SA exposure versus international as you move forward?
I think we've been putting down a presence in 5 African countries for, more than 5 years now. And we have local representation in country, which we think is essential to success. We have been doing it slowly and steadily because we want it to be sustainable. And therefore we'll continue in that vein. We certainly are open to acquisitions in region as well. So at the moment we don't focus on only one geography. We're able to sell the IP that we own and the solutions that we sell across the globe. We have customers in 55 countries, and we have 10,000 customers, but we only have operations in 8 countries.
Let's leave it there. Thanks so much, Tiffany, for having joined us on the line this evening. That, of course, Adapt IT CEO Tiffany Dunstan.